Both the Fed and the Bank of Canada just cut rates. If you're investing from Canada, here's a simple, low-risk way to rebalance. Welcome back, everyone. Here's Mabel Alex Trades. This channel covers what Canadians need for U.S. markets: basics, real opportunities, and policy explainers. Quick timeline first. Both cuts landed in late October. The Fed's target range is now 3.75 to 4%, and the Bank of Canada sits at 2.25%. Rate cuts make noise. Our plan shouldn't. Here's the practical part. 3 ground rules, 2 ready-to-use mixes, and a 1-page checklist you can follow tonight. First, there are 3 quick rules before you touch anything. Number 1, size. Around events like this, keep any single change to 1 or 2% of your total portfolio. Small moves, you can always add later. Number 2, placement beats prediction. Put things in the right accounts first, then think about returns. RRSP, TFSA, or taxable match the asset to the account. Number 3, cash buffer. Keep 6 to 12 months of living costs in cash-like holdings. It keeps you from selling good assets on a bad day. With cuts starting, bond math changes. Here's a plain path. Step 1, extend a little duration, but not all at once. If you've been stuck in short-term or HISA ETFs, slowly rotate 20 to 40% of the bond sleeve towards short to intermediate funds, or ladder that reach 3 to 5 years. Step 2, keep a short duration core for stability and rebalancing cash. Step 3, if you hold bond ETFs in taxable accounts, check distributions and your tax slip from last year before you move. On the stock side, a cut isn't a green light to floor it. Look at your target weights. If something drifted 5 points over target, trim it back to plan and top up bonds. If you're not sure what to add, go broad. A US total market fund or an S&P 500 fund does the job. Plenty of Canadians use TSX listed equivalents to avoid FX friction. That's fine. Pick the tools you'll actually hold. Be careful with rate-sensitive sectors. Utilities, REITs, and longer duration growth can bounce, but keep exposure small and rebalance on a schedule, not on headlines. Now, if you're using US exposure, that naturally brings up currency. When both central banks are easing, CAD USD can swing depending on who cuts faster. You don't need to predict the move. Pick one policy and stick with it. Option A, go unhedged. Accept currency moves and focus on long-term compounding. Option B, use CAD hedged TSX tickers or for your US sleeve if swings stress you out. Option C, split it. Hedge the bond sleeve, leave equities unhedged. All 3 can work. What matters is choosing one and not flipping after a rough week. With your FX policy set, the next question is where each piece should live. This is the quick order of operations for many Canadians. RRSP for US dividend payers, because the treaty can reduce the US withholding to 0 inside RRSP. TFSA for growth you expect to hold long-term. Note that US dividends may still face withholding inside a TFSA, taxable for things that are tax efficient or need quick access. Your situation can differ. Always check with your provider, but this order keeps most people out of trouble. Okay, once the home is set, let's make this practical. Template 1, the 60-40 refresh. 60% stocks, half Canada, half US global using broad ETFs. 40% bonds, half short-term or cash-like, half short to intermediate in a simple ladder. Rule, rebalance when any sleeve drifts 5% from target. Template 2, the 70-30 growth lean. 70% stocks with a bit more US. 30% bonds that ladder out to about 5 years. Same rule, 5% drift, check quarterly. Pick one, write down your target weights, and you're already ahead of most people. And next, here's the quick checklist you can run through tonight. Write your target weights for each sleeve. Pull your current weights from the app. Circle anything that's 5 points off. Those are your action items. If you're buying US listed funds, make sure you have USD ready and your W8 is on file. If you prefer TSS tickers, decide if you want CAD hedged or not and stick with it. Set a reminder to review in 3 months. Don't rely on memory. But try to avoid making common mistakes. Number 1, moving your whole bond sleeve to a long duration in one shot. Number 2, flipping your hedge policy after one bad week. Pick it and keep it. Number 3, rebalancing in the middle of a headline spike. Use the end of the day and the next morning when things are calmer. Rate cuts change the math, not your plan. Keep sizes small, place assets in the right accounts, and let your rules do the heavy lifting. The one-page checklist is below. Templates, drift thresholds, and account placement notes. Comment rebalance if you want it. If this helps, please subscribe to Maple Alex Trades. 2 deep dives and 6 shorts every week. Canada first. See you next time.